Disappointed in Elon. I've helped Elon a lot. Elon and I had a great relationship. I don't know if we're well anymore. I was surprised because you were here. Everybody in this room practically was here as we had a wonderful send-off. He said wonderful things about me. You couldn't have nicer. Said the best things. He's worn the hat. Trump was right about everything. And I am right about the great, big, beautiful bill.
Elon Musk goes from Doge to the doghouse as the relationship between the world's richest person and the world's most powerful man explodes into an ugly feud started by the so-called Big Beautiful Bill. And the fallout is expected to spread far and wide. Live from Singapore, this is Inside with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. President of the world's biggest economy has held productive talks with leaders of the second and third largest over the trade tensions that have rocked markets and hurt the global growth outlook. Donald Trump finally had his much-awaited phone call with President Xi of China and also hosted the German Chancellor in the Oval Office. Normally, that would be our top story. However, it's all been overshadowed today by Trump's explosive feud with the world's richest man and his former ally, Elon Musk. It's been a swift and spectacular public unraveling of the bromance between the U.S. president and the Tesla CEO. The relationship went from bad to broken in just a few hours of public posting. The two attacked each other from their own social media platforms with explosive claims of issues both big and trivial. Musk went as far as calling for Trump's impeachment after describing him as an ingrate and suggesting that Trump would have never won the election without his help. The president in turn calling Musk crazy and hinting that he may terminate U.S. government contracts and subsidies given to Musk's companies worth billions of dollars. At one point, Musk also insinuated that Trump was withholding the release of files related to disgraced financier Jeffrey Epstein because of his own presence in them. As Musk posted on X, one thing's for sure, it ain't boring. But the falling out of the two of the most powerful people in the world has tremendous implications. Wealth manager and longtime Tesla bull Ross Garber told us earlier that this feud is not a smart play for Musk.
This is a disaster for Musk. I don't know if I can spin it in a positive way because it's just so beyond any intelligent businessman's behavior would be. I can't imagine after putting Trump in there that he would then turn Trump into an enemy of all things, because he's still the president of the United States.
Well, Tesla stock was hit hard and is also hurting shares of some of the company's suppliers in Asia this morning. Avril Hong joins us for a closer look. And Avril, when you take a look at those Tesla shares, $150 billion wiped out, ain't small change.
Yeah, and it's also come at huge personal costs for Elon Musk, which I'll get to in a bit. But when you look at the slide, the plunge we saw in Tesla, I think Charu Chanana of Saxo put it best. It's very quickly Tesla having this political premium being flipped into a political discount, and it's all coming at the time where its fundamentals were not very strong to begin with, and this just piles on this fresh downside risk, the fallout of the Trump-Musk relationship. So Tesla stock plunge. We're also seeing in Asia its supplier stocks not faring that much better, including the Chinese battery giant CATL, about 13% of its sales actually come from Tesla. Now flip the board and take a look at this blow by blow, because we saw it really unraveling almost minute by minute as this exchange exploded on social media, right? Because Trump calling, Elon Musk's name, saying that he was disappointed in him, and then going on to call him crazy. We also saw how Musk said without him, Trump wouldn't have won the election. Of course, we know how Musk was a big backer for Trump on the campaign trail. And then it all descended into further name calling. As I said, Trump calling Musk crazy, and that left stocks of Tesla down 18% at one point before it paired some of those declines by the close. Now, as I say, it was huge personal costs for Musk. It was a $34 billion wipeout in his wealth. And this is the second largest decline in wealth on the Bloomberg Billionaires Index, the first actually coming from Musk himself back in November 2021. He's still the world's richest man, but keep in mind, at one point his wealth was around $500 billion, not long after Trump's election win. So this is really coming at the cost for the billionaire, Haas.
Well, still about $100 billion more than Zuck, who's next in line. Avril Hong, thank you so much for that. Let's get insights, perspective. Joining us now, Kevin O'Leary, chairman at O'Leary Ventures. Kevin, good to have you with us. It was just in February that Musk said that he loves Trump as much as a straight man can love another, and yet here we are. What are you making of this spectacular fallout of this bromance?
If you go back to Trump's first term, and even in the second term, the number of people in the inner circle, it's very volatile. People come, people go. Think about Walsh, he's out. It's kind of like it's a rotation. You get too close to the sun, your wings melt, you fall out. But it's not the end of the free world as we know it. I actually think these two men will get back together again. I know it's salacious. It's a really interesting story. But at the end of the day, they both have attributes that the other wants. And so you think about Tesla. We've talked about the stocks decline 14+%. I'm a Tesla shareholder. I've seen this movie multiple times. It's one of the most volatile tech stocks in the world. And it's driven by, many different things. But Elon Musk is rather unique. So you think about, do I want to stay long on this stock? This is another time when it's had a huge, big vol on a day. So yes, robotics coming out of Tesla, autonomous driving coming out of Tesla, low cost EVs. Yeah, I want to keep long on this. And so it's like a Tylenol story. You have a really bad day. Remember Tylenol decades ago? People said it would never be around again. It's 10 times the size. Elon's story he's a unique individual, and Trump is a unique individual. Obviously, they both have huge egos. They had a bad date. People, it's like a marriage, and they're having a fight. They're having a tiff. I'm over it already. I think this is noise, frankly. I don't think it really matters long term. They can call each other on their cell phones and work it out, and they will.
But Kevin, people say that this alliance has gone longer than most anticipated. This was a long time coming. Why do you think they will work it out? Why do you think cool heads will prevail given those huge personalities? Is it pragmatism?
Elon Musk is a unique individual. Think about the achievements he's made and all of the different industries involved in that express the technical might of America. Starlink, imagine if you're a soldier in the Ukraine, thank goodness you have that, or anything he's doing with SpaceX and Tesla and robotics and Neuralink. Trump wants to be close to that. The whole administration wants part of that story. And frankly, so do the Chinese. The whole thing is all integrated together. Today was remarkable in just how these stories eclipsed everything else. I think the China story was big. I think, the German chancellor was there, and he got just wiped out by the tweets and the social media that was coming out of Trump. The whole thing is remarkable. We're in a very fast-paced world now. But I keep saying this about Trump, and I'm saying this about Elon Musk. Ignore the noise. Focus on the signal. It's not easy to do in the world we live in. I'm an investor. I don't care about noise. I don't care about the tiff these two are having right now. It's irrelevant. I focus on the signal. Do I stay long Tesla? Yes. I don't like volatility, but I understand why it's happening. But find me another company like it. Why would I sell it? I actually think if you're Trump, you're saying, wait a second, this guy leads the free world in space, and I want to stay close to him. they're going to work this thing out. I mean, I know I understand how people can have angst about it, but I really focus on signal. The noise is almost entertaining, but irrelevant if you're an investor.
Kevin, noise or not, there are real implications here. If there is a fallout, I mean, Elon Musk is a man who's been privy to inside information. He's got top secret clearance. There's huge implications for the country and the world.
Yeah, I don't think he's going to lose that. I think cooler heads will prevail. This is a remarkable administration, and I'll tell you why. Because anybody else, any other administration, any other president historically would not have these narratives in the open. Trump believes that everybody should watch the sausage being made. There's a camera inside the White House every time he entertains the leader of another country. And often poo-poo happens. Look at what happened with Zelensky. It was crazy. And he did the same thing with Carney, the new Canadian prime minister. And today you saw that with the German leader. And so he doesn't care. He understands the power of social media, good, bad, and ugly. But at the end of the day, it's all noise. And that's what you have to understand. If you understand that, because I've lived with this, you know, if you're not used to Trump's noise now, you're never going to get used to it. And half the world lives with a really unusual situation called Trump derangement syndrome. And they watch this stuff and they go crazy. And I say to them, because I'm an investor all around the world, and I keep telling everybody, I really don't want to spend any time talking about Trump. I'd rather talk about his policies, because we're not going to make any money in politics. We're going to make money with policy. So if you are stuck
Let's talk about his policies, Kevin. I mean, he has imposed tariffs to the extent that no one expected. There is a real possibility now that he may just pull back on federal funding. He suggested he might just do that when it comes to Elon Musk. I mean, how do you see that playing out? Should that happen? The implications of on NASA, for instance.
Well, ask yourself, who's done a better job? Who's more productive in space? SpaceX or any other agency? It's SpaceX. They're the ones that rescued the astronauts off the space station. You got to remember, I mean, at the end of the day, you got to be pragmatic. There's nothing better right now than SpaceX. They cost less, they do more, and they're better. And that's the private sector in action. So that's why ignore the noise, focus on the signal. Signal's productivity and outcome. That's what matters. So maybe we had a bad date today. I mean, obviously these two went at each other. So what? I mean, it was very entertaining, but I don't give a damn. It doesn't change how I think about investing. Would I give up a position in SpaceX or no, of course not. Or Neuralink? No, not at all. I would never do that. So I don't understand why people are so focused on this.
We're focused on this because a lot is at stake, and we're focused on this because of the unpredictability of Trump, the president himself. We had Stephen Bannon coming out to say that perhaps it is time for the Trump administration to seize SpaceX and using the executive order by midnight tonight. So you don't see a risk of that happening at all?
No, I don't. I mean, look, it's salacious. It's wonderful TV. It's getting a tremendous amount of clicks. I get it all. But there's nothing better right now than SpaceX. Nobody can outperform them. So you have to think about that. Is that really a good move? Not for the American government, not for Trump, not for Elon. They're going to work it out. Listen, I deal with it. There's always drama. There's a lot of noise. There's a lot of drama. But you have to stay focused, if you're an investor, on the outcome. What's the outcome? And I say the outcome, when things cool off, is the status quo. And we'll see how that works out. I mean, look, Doge is still a very popular idea on a bipartisan basis. That brand was created between Elon and Trump. It remains an interesting opportunity, and most American taxpayers are interested in finding out how we can constantly look for waste in government. Those two men created that. Let's not forget it. And I think at the end of the day, this thing will get worked out. I'm certainly, and what I'm saying to, look, every institutional investor I talk to today is not changing their position based on one day of tweets. doesn't matter. You have to get used to the noise.
You talked about how investors should be focused on the value, Kevin. I mean, if you take a look at the volatility in Tesla stocks, you got to be worried. I mean, add to what is happening today, you also have the issue of perhaps a board that may want to remove Musk.
It's not going to happen. I've been a shareholder in Tesla stock for a long time. Volatility forever. I mean, very few large cap stocks have the vol that Tesla has. It's based on a lot of noise. And it goes up 20%, goes down 20%, goes up 20%. So what? If you believe in the mandate of the company, if you want to be part of autonomous taxi cabs around the world, you want to be part of robotics, you want to be part of the most efficient battery company in the world, and what Elon Musk has already proven, give me one mandate that man has started that he hasn't executed on. I mean, you may not like his style. Maybe I should say you have Elon Musk derangement syndrome. I don't care. But show me one other entrepreneur that has delivered what he's delivered. I don't care about the noise. I focus on the outcome. And right now, show me somebody better in all of the mandates I just detailed.
Are you then buying the dip, Kevin?
I always buy the dip. It's always rewarded me. There's never been a time where Tesla dip wasn't a good buy. Ever, since the beginning of the company. So maybe one day that'll happen, but not for me. My cost base on Tesla is zero. I bought this thing before the splits because my son was working there and said, Dad, you don't get it. It's a data company. It's not a car company. And damn, was he right.
Kevin, you talked about the big issue that's been overshadowed by developments between Trump and Musk, and that is China. What are you making of the talks that the two leaders had?
Well, I'm encouraged that they're having talks at all. I mean, I have been dealing with China for 20 years, and I'm very on the record on how I feel about it. I love the Chinese people. I love the Chinese market. And I've been trying to do business there for 20 years. But the government, I don't trust. I don't trust the government at all. They cheat. They steal. You can't get access to the legal system. They abuse the system in the U.S. in raising capital. They litigate here. We can't even do that in China. They've abused their relationship with the WTO since 2000 when they came in. I have no faith in the Chinese government. And so any negotiation that happens should come with, the problem's been forever. All the administrations since 2000 have never put any consequence on when they've abused the rules. And so the Chinese government says, whatever we do, we can get away with it. This administration, for the first time, is saying maybe not. Maybe we squeeze your head pretty hard if you start abusing the agreements we've made, including, trade grievances at the WTO and everything else. They just don't play by the rules, and they don't give a damn because nobody makes them pay the consequence. I want this administration to squeeze Chinese heads till their eyes pop out because I'm done with it. They lie, they cheat, they steal. Let's see them play by the rules. Let's see them. If they really want to play in the G7, G8, they want to join with the big boys, they're going to have to play by the rules. And maybe this time they will.
You have suggested 400% tariffs on China. Eventually, though, where do you see tariffs settling amid all the negotiations between the two sides?
If China wants to play ball and join the rest of the world and play by the rules, I see a 10% reciprocal tariff. But I suggest that 400% is a trade blockade. I wanted to shut them down. I mean, the Chinese economy is not doing that great. And the largest market they sell to is the United States. It's a 5-to-1 ratio of trade discrepancy. They sell 5 times more stuff into that consumer market. It's still the largest market on earth, the U.S. market. The Chinese will have to fire thousands of people out of the factories that make stuff for the American consumer. I don't think Xi can do that. Let's call his bluff. Let's squeeze his head. Let's make him play by the rules. Let's call it what it is. It's time to play ball.
And yet, people talk about the taco trade. Trump always chickens out. As an investor, do you see opportunities in that?
I think it's all a negotiation, up and down, round and round. Same thing going on with Canada right now. Same thing with Germany, India, Japan. I think it ends up in a reciprocal tariff of 10%. Remember, the U.S. doesn't have a VAT tax. There's no consumer tax in the U.S. A 10% reciprocal tariff effectively is a 10% VAT tax on America.
So do you see opportunities right now?
Yeah, I do actually. I mean, it doesn't matter.
Where?
You and I were talking about this, and look at the S&P 500. It's 2.4% off its all-time high. The market sees the future. It understands the volatility of Trump's style. Again, focus on the signal, not the noise. If you were really concerned, if you really thought this wasn't going to work out, if you really thought there would be no trade deals whatsoever or something couldn't be worked out with China, you would not be 2.4% off the S&P all-time high. You wouldn't be. The market looks forward, and what it sees, it likes. I don't think it's wrong.
So is U.S. exceptionalism still intact, Kevin, given the big and beautiful?
I think so. I mean, look, I'm always an optimist, but I'm a realist. And so I have diversity in my portfolio, but I think the real deal here is China. The other 17 countries, they're going to work that out. But China is the one, because it's not just tariffs, it's IP law, it's access to markets, it's the WTO, it's what China does in accessing capital markets in the US. All of these things have to be negotiated. So I'm happy they're talking, and I'm very happy to hear they're going to be visiting each other. That's all great. It's the beginning of a negotiation, and it has to happen because, listen, I want this administration to clean up the Chinese mess. I'm living with it. It's horrific. We've been dealing with it for 25 years, and nobody's fixed it. So let's fix it now.
Kevin, we appreciate your perspective today. Kevin O'Leary, Chairman at O'Leary Ventures. Still ahead this hour, we'll examine how the erosion of U.S. exceptionalism impacts emerging markets with Moneta. Plus, it's RBI decision day. And Kotak Mahindra Bank will be joining us to break down expectations for a rate cut. Keep it here with us. This is Bloomberg. Well, we woke up today to that spectacular fallout between Trump and Musk, with Trump suggesting that he may just pull back on the federal funding, federal assistance given to Tesla as well as SpaceX. We're keeping an eye on Tesla suppliers here in Asia. We're seeing pretty much red across the board. Of course, we had Politico having that interview with Trump, and it did ask Trump about that feud between the two, and Trump says it is okay. And the Trump aides now suggesting that a scheduled Friday call between the two men, between Musk and Trump, will be taking place. And that's according to Politico. Take a look where we are in terms of those Tesla suppliers here in Asia. CATL currently down by 0.6%. Well, still to come, Moneta explains why some fund managers are starting to talk about the EM-fication of bonds in developed markets. Our conversation is coming up next. Keep it here with us. This is Bloomberg.
I think we have everything. I think we're in very good shape with China and the trade deal. We have a deal with China, as you know, but we were straightening out some of the points. By the way, he invited me to China, and I invited him here. We both accepted. So I'll be going there with the First Lady at a certain point.
President Trump talking about his 90-minute call with Chinese President Xi Jinping. Now, the Trump-Musk feud has also stolen some of the thunder from news that China and the U.S. agreed to resume talks aimed at resolving disputes over tariffs and supplies of rare earth minerals. Let's get details now from our Chief North Asia correspondent, Steve Dangle. Steve, gotta say we were wrong. They did have that talk.
They did have the talk. I was a bit skeptical that it would actually happen, especially after about a day and a half ago, we had that late morning social media post from President Trump, all in caps, saying Xi Jinping is extremely hard to make a deal with. But the talks a 90-minute phone call did happen, and it brought down the temperature. Let's just be very frank about that, because following that trade truce that was brokered in Geneva a few weeks ago, things had gotten a little bit testy. Of course, there was a lot of questions about Chinese student visas. There were further tech restrictions announced by the United States. China, according to the United States, had not relaxed to their liking the license requirements for rare earth magnet exports. There was a lot of uncertainty between these two superpowers and these two gentlemen because they hadn't spoken since January. So they've now had that talk. Donald Trump said, you know, he admitted that trade talks and the relationship had gotten a little off track, quote unquote, but that now that they are in a very good shape. The Chinese readout of that phone call was a little bit more pointed, saying that Xi Jinping had asked Trump to remove the, quote, negative measures the U.S. had imposed on China, namely or not namely, but referring to the tariffs, obviously. Still, we don't have a lot of details about what Donald Trump offered as concessions to Xi Jinping, if any, and really what the Chinese offered, other than they've agreed to invite each other to each other's country. Both have accepted those invitations. We don't know if that's going to happen or when that's going to happen. And again, they've agreed to continue to talk. We don't know as well when the next round of trade talks will happen or where it's going to happen. But the temperature has come down a little bit, obviously.
Still a lot of we don't know. We don't know what the concessions were made. Now, we know, though, that the Treasury Department declined to name any country a currency manipulator, but singled out China for its lack of transparency. Tell us more about that.
Yeah, so a 90-minute phone call is not going to resolve the long list of issues between China and the United States. It helps bring down the temperature, as I said, but there's still Treasury and Commerce Department who are actively involved in their various remits. Treasury Department put out their semi-annual currency manipulator report. They didn't name any country, but did single out China for its lack of transparency in its FX policies. So again, that is always going to be an issue as long as there is such a widening and record trade deficit between the United States and China. So that's almost to be expected. But China was not named or designated a currency manipulator. Now, separately, Commerce Department, Howard Lutnick was giving some testimony saying that he'd like to see better enforcement, more agents going out and meeting and inspecting exporters, going to warehouses to make sure that compliance of the export controls that are already in place are being carried out and enforced. This is what he had to say about the threat China poses to the stealing of U.S. high-tech IP.
They are trying to copy our technology, and in the race for AI supremacy, they are behind us, but they are working with the central government out to get us, right? To beat us so that they will have intellectual superiority over us.
So as you can see, Haslinda, obviously there are issues still to be resolved. The phone call helps things, but it was downright dull, that phone call, I would imagine, compared to the fireworks being and the hand grenades being lobbed by social media between Trump and Elon Musk.
Never a dull moment. Stephen Angle, thank you so much for that. Bloomberg Chief North Asia correspondent there. Well, joining us now, Aoifinn Devitt, Senior Advisor and Global Market Strategist at Moneta, which manages around $40 billion of assets. Aoifinn, good to have you with us. So, as Steve says, the temperature has been dialed down, but I gotta ask you, I mean, how much of that uncertainty has actually been removed? We don't know much.
Very little. We've had a lot of indications that trade negotiations are happening, very little in the way of results. And if we look at the earnings statements coming out of companies this quarter, there's a lot of reference to trade, to uncertainty. It is dominating those results and those statements. So clearly planning for the future is something that's very difficult to do. And unless we start seeing some meat on the bones of these positive indicators, I really don't think investors will know how to factor that in.
So, Aoifinn, stand pat. Do you stand pat in terms of your strategy right now? Until
Yes,
that's
we
greater
do.
clarity?
I would say that we are generally allocating to non-US markets at the margin. I think that's important to rebalance there. There has been an outperformance of US up to now and until the last, say, 6 to 8 months. So we're now ensuring that we rebalance there. We're not taking particularly tactical positions, but I do think that there is a need to basically to start doing more due diligence, more work on the non-US areas, because I think that's where people will be allocating at the margin. Outside of the US, we've already seen this.
When you talk about non-US areas, which markets are looking attractive? It does seem like EMs are coming back into play.
Yes, it's a very interesting thesis that's been circulating, and many of your columnists have been referring to it. That the fact that American exceptionalism is on the wane, suggesting that if nobody is exceptional any longer, then there has been an opportunity for the laggards to really catch up and have another look from investors. And that's something we're seeing certainly in emerging markets. As the US is certain to, as I said, at the margin, there's money flowing out. There is a sheen coming off that exceptionalism. The only exception to that is the AI and tech story, which still very much dominates and favors the US. But we're seeing funds flowing out of treasuries, out of the dollar, and that is going to behoove well for emerging markets. I would say where we're looking more favorably right now is still developed markets outside the US. So Europe is looking very strong. It's been overlooked for some time. Developed markets in Asia also looking particularly strong. And I'd say even emerging markets, their currencies are doing well with this current uncertainty around the US. And I also think there's an opportunity for there to be some winners when these trade deals finally get cranked out.
But isn't it true that you can't really look at EMs with a broad brush? I mean, some may do better than the others. As you take a look at a weaker dollar environment, which are the best bets? Which are the better bets?
Very good question. We completely agree. We don't think it's a sweeping definition that is well applied. But that's therefore why in EM we tend to prefer active management, because we think that it is important not to just buy the index, to be more discerning about certain stocks. We've always liked the consumer story in China. We think that that has a lot of legs, still has been somewhat oversold and has good potential. Again, though, there has to be, because we've seen just this in today's numbers, when there is a flurry of anxiety on the trade front, the suppliers start to get hit. So looking across the supply chain requires a deep understanding, and that is a little bit complex. But within, I'd say outside the EM, DM has a much more clear picture, because we are seeing very clear incentives. We've had the 8th rate cut by the ECB. We know that they're trying to relax on the fiscal side, relax some of their constraints. And that is looking to a very stimulative environment where growth is still present. And when we have big trading partners of the US like Mexico and Canada looking specifically outside the US to form their next trade partner, to have their next ex-US investment. And I think finally, there's more uncertainty regarding the US now because of taxes. The big beautiful bill does have what some have described as a poison pill in there around taxes that is yet to be worked out. That could be a further penalty for non-US investors investing in the US. And that also would behoove very well for emerging markets and non-US developed markets.
Aoifinn, what's been interesting is actually DM bonds. There's been so much volatility. Treasuries, case in point, they are beginning to look like EM bonds. How do you play this space, and what's the key takeaway here?
I love this analysis, and some of this came from a manager called 91 that we've been following. They talk about the EMification of DM debt. And that is exactly what you refer to. It is the increase in volatility in DM, and that has been, we've seen that manifest for some time. Fixed income has been a lot more volatile than equities. We've seen some catastrophic moments, such as the Trustonomics, when we saw a flight out of UK gilts and dramatic moves in those yields in one day. We've seen similar moves around US treasuries, not quite as dramatic, but that was regarding some of the various Fed moves, as well as the suggestion that this new big beautiful bill would add significantly to the deficit. So all of these sharp moves within DM bonds, and the fact that they are yielding reasonable amounts now, means they're starting to look and feel a lot more like EM bonds. And just like the equity thesis, if nothing's exceptional, then everything can rise. Similarly with bonds, if DM looks like EM, well then EM starts to look interesting, for, at least from an analysis standpoint. So I think that just does make fixed income a little bit more precarious when it's all looking more volatile.
How high might yields go for treasuries, you think?
I think we're looking at a bit of a ceiling right now. We know that that is the number. The 10-year Treasury is firmly the number that Scott Bessent is focused on. That is the number that drives corporate borrowing. It drives mortgage rates. And when that started to hover over 4.5% and in the 30-year over 5%, that was really maybe the yippiness that finally was enough to lead to a rollback of some of the tariffs and some of the harsh rhetoric. So I would be very surprised if we were to tolerate that getting any higher. And obviously it's out of one's control. It's the bond market that dictates it. But I would suggest we're going to see either Fed action to get their rates down because they're now a laggard among global central banks, or we're going to see some other stimulus inserted into the economy to try to have more calm and more generally provide for more growth. So I don't think we're going to get that much higher simply because that is a number being watched so closely.
The big debate among investors right now is the health of the U.S. economy. When you take a look at the data, which is what the Fed is looking at, ISM, ADP, and the others, it does seem like it is a mixed picture. What's your own assessment of the U.S. economy? What are fundamentals telling you? What in particular are you looking at?
It's very interesting. We've looked at the kind of divergence between hard data and soft data for some time. The hard data was coming out somewhat stubbornly resilient, but then the soft data, the sentiment for consumers certainly had been swooning. It was very interesting just in the last read that the consumer sentiment had jumped, but yet the CEO sentiment was still fairly negative, with 83% of CEOs predicting a recession in the next 12 to 18 months. I would happen to think that those insiders, the CEOs who know consumer demand, know about their own corporate plans, might be believed more than consumers. But so let's get back to that then. I suggest there is this undercurrent of weakness, of concern, of uncertainty that really consumers are starting to feel some pain and rein in their spending. However, because of AI, because we're seeing these bumper numbers around revenues from NVIDIA and the like, the Mag 7 back to the races in terms of their performance, that is distorting the picture for the overall stock market. So I think we are still looking at some weakness unless we get some near-term resolution, and I mean the next 6 months, resolution of this trade, that's essentially landscape, that is still kind of fraught with uncertainty.
You got to wonder how much pressure the Fed is under to cut rates. With just, as you mentioned, the ECB cutting rates 8 times in 8 meetings. And we also have President Trump putting pressure on Jerome Powell to cut rates. What are you anticipating?
There's been a lot of game theory analysis around the Fed and behavioral analysis because certainly they have been committed to data dependency. They have been very firm, very mature, very much sort of reliable institution now that they've regained all that respect. And they don't want to squander that. And even after the meeting with the White House, I think there was a redoubling down of their commitment to their policy. So lots of good telegraphing. And I think they have been easier for an investor to deal with because that telegraphing has generally been quite accurate. So I think no surprises is the order of the game for the Fed. There will be pressure with this latest rate cut, but the Fed will not act simply because the ECB is act. They will act based on US data. And I think if there is now likely to be any ongoing reaction to this just unsettled attitude around trade, I think they have some bullets in the tank essentially to act, but I don't think that they will be bullied into it from anywhere at this point. So data is going to be key. And as long as inflation remains in check, I think we could be looking at 1 or 2 rate cuts this year.
A Fed that is still data dependent. Aoifinn, great insights. Aoifinn Devitt, Senior Advisor and Global Market Strategist at Moneta. Now, still to come, Kotak Mahindra Bank weighs in on why the Reserve Bank of India is likely to deliver its 3rd rate cut of the year today. Keep it here with us. This is Bloomberg. Welcome back to Insight. India's just kicked off its trading day. Here's a quick check of Indian markets ahead of an RBI decision in the next hour. It is highly anticipated for it to cut rates for a third time in a row, and that is to boost growth. It is widely anticipated that the repurchase rate will be cut 25 basis points to 5.75%. Here are the early numbers. The Sensex, as well as the other benchmarks, are in India in negative territory. Sensex down by 0.2%. The Indian rupee pretty flat versus the USD 85.79 is what we're looking at. And of course, joining us now, Upasna Bajwaj, Chief Economist at Kotak Mahindra Bank. Upasna, give us a sense of what you're anticipating. Rate cut from the RBI?
Yes, absolutely. The conditions in India, if you look at the growth and the inflation dynamics, at this point, inflation is absolutely not a worry for the RBI. In fact, not just at this point, rather, I would say for the full year as a whole, we are looking at an average inflation of around 3.5% handle, which is significantly lower than the medium-term target of 4%. One. On the other side, if you look at the growth, there are much more uncertainties. The global headwinds are very strong. And that is, of course, delaying the revival of any capex, private capex cycle, if any. So the whole weightlifting, the whole heavy lifting is at the moment being done by the government and is expected to continue only through the consumption demand for the rest of the year. So we are looking at 6.2% GDP growth for this year, with risks evenly balanced because we don't know how the global environment is going to pan out given the trade-related uncertainties. And that is something which will be important to keep in mind. And as a result, we expect RBI to continue in its path of monetary easing.
So let's talk about that. The question really is the length of the monetary easing cycle. What's your take on that, given the uncertainties that you just mentioned?
Yes, absolutely. So I think here there are two things to keep in mind. While we have at the moment seen 50 basis of a policy repo rate cut, we have seen an effective easing of 75 basis already by the RBI, largely because of the aggressive liquidity easing measures that have been done. So 75 basis effective easing. And from here on, given the uncertainties and the fact that there is the potential growth of the economy is much higher and there's enough slack in the economy and inflation is comfortable, we see still more headroom for monetary easing, with the policy rate somewhere closer to 5.25%, which is incrementally about 75 basis to 100 basis lower from current levels.
You talk about resilient growth. We saw that in the quarter to March, and some say perhaps that could just be an anomaly. How do you see the RBI reading that growth performance in India in the first quarter?
Yes, absolutely. If you look at the details, there are 2-3 factors which led to this kind of an upward surprise that we saw. One, I would say, is that there was a lot of back-ended, because that was India's financial year end. And the first half of the year, we did not see much of government spending in terms of capex because of general elections in India. So there was a lot of back-ended spending for the rest of the year. The last quarter saw that concentrated government spending. So much of the support came from that. So, it was all linked to infrastructure, the real estate sector, the construction spending. That is where we saw a lift-off happening. The second important place where we saw uptick was also in terms of the net real exports picking up significantly. And I think this was a probable trend which we've seen across the globe, wherein because of the trade-related uncertainties, a lot of front-loading happened in terms of exports. So we did see net exports contributing significantly to the overall GDP for the fourth quarter of India's financial year. And I think that is something which will fade off going ahead. Even the fiscal headroom remains limited. And given that we're talking about private capex being still muted and getting further clouded, the outlook being further clouded by the global uncertainties, the investment cycle being very uncertain, I think that will be a problem going ahead. And that should keep India's GDP growth around 6.2%, with risks, I would say, evenly balanced because of the uncertainties.
You talked about how the RBI is expected to still bear the brunt of boosting growth in India because the government is set on focusing on consolidation. How much room does the RBI have? What measures do you see the RBI implementing in the next 12, 24 months?
As I said, one is the monetary policy easing, wherein they do have room for 75 to 100 basis of further rate cuts. Alongside, we expect them to continue to keep liquidity very ample because monetary transmission is very important. There is no point having repo rate cuts if we are not able to transmit that to the economy. So we expect them to continue to monitor liquidity conditions. At the moment, there's no need because there's very adequate liquidity in the system. But we believe that after 6 to 7 months, there will be some draining out of seasonal liquidity, which is something which RBI will have to relook at and ensure that liquidity remains ample to ensure adequate transmission. At this point, we don't expect any more macroprudential norms to be tweaked or any such thing because the system is looking adequately equipped.
Ongoing negotiations between the US and India when it comes to trade. How soon do you expect a deal? What assumptions are you making?
At the moment, we're expecting that in a month's time, we will see some deal being cracked. So hopefully by then we'll see that. So, only 4 months have passed by, and post that, we will see some stability overall in the climate here, investment climate here in India. So our base case assumes that in a month's time, there will be some kind of deal with the US.
And what would that mean for the economy?
It definitely provides clarity. It provides more stability. The kind of uncertainty which we are living in today from the US administration side, that will at least to an extent get, cushioned. Of course, that doesn't mean that, it's not just about the India-US deal. It's also about how the rest of the world is grappling with this uncertainty and the global slowdown, which also has its own ripple effect on India's exports story. But obviously, if a US-India deal is cracked in a month's time, then it provides much more clarity to the investment climate in India. And that should at least give us hope that the second half of the year should be slightly better than the first half.
How much are you factoring in the possibility of China dumping more of its cheap products in India?
It's a clear big risk, of course, not denying that. But at this point, we believe that the policymakers will be upping their stance on this to quite an extent to ensure that, that kind of a risk is minimized, the least I can say. It is not that we can completely control that. But as I said, the 6.2% GDP growth has both sides evenly balanced. Clearly, we'll have to see how the situation pans out. And accordingly take a call. At this point, we believe that the policymakers will be much more rigid in their stance to minimize that impact.
Upasna, thank you so much for that. Upasna Bajwaj, Chief Economist at Kotak Mahindra Bank, and subscribers can also turn to the terminal for more on the upcoming RBI decision. Go to TLive Go. This is Insight.